What's up everyone, welcome to a new investing video from PerFinEx, the #1 English speaking and independent financial planner in Germany. In today's picture you can see me in a couple of years still trying to get my head around how financial markets are behaving in times like these. That's why I'm wearing the same gray shirt today. It's complete madness if you ask me, that nobody could have predicted. And that's why this episode of our community investing is called Expect the Unexpected. You wonder what I mean by all that craziness, because the stock market seems surprisingly calm, right? The stock market is. You're right about that. But financial markets as a whole are much more than just the stock market. And one market in particular is going absolutely ham. You wonder which one? Then let's go. Let's start this month traditionally with the pro investing news, followed by the con investing news, which is just one today. Just one single reason why you shouldn't start investing today. And right after the development of our 3 investing strategies in March. Can you see me smiling? Development was good. So let's get straight to it. You can skip to whichever agenda point you're interested in with the timeline here on YouTube. Let me tell you a story why investing is a good idea and use the current German real estate market as an analogy why waiting to invest is usually never a good option. One might think, myself included by the way, that in times like these with the war happening and whatnot else, that people are worried. And worried people usually don't invest. Right? They want safety. So some even go to their bank and withdraw everything because they're worried that even the money in the bank is not safe anymore. Well, this episode is called Expect the Unexpected for a reason. Because over the last weeks the exact opposite happened, which nobody could have predicted before. While everyone was waiting for financial markets to drop and the stock market did a little, the real estate market went completely ham. Investors are fleeing into safe real estate and drive up prices even more. Everybody thought asset prices will drop because of the war, myself included. And property prices just went up and up and up over the last weeks, even faster than before. That's just showing every one of us that nobody can predict the future. And everyone who even tries to be smarter than everybody else will probably lose money doing so. Now you might say, but Axel, you're always saying that there's not just one real estate market. So how do you know prices went up even faster? There's 2 data points that prove my point. While we were financing properties for clients for 0.some% interest rate last year, the lowest we got was like 0.6 in summer last year, we are almost at 2% interest rate right now, which is crazy if you think about it, that interest rates basically quadrupled from 0.5% to 2% in just a couple of weeks. We were still financing for 0.8% in December last year. Why did interest rates increase so much? First, because the American Central Bank Federal Reserve talked about raising interest rates in response to the high inflation, and the market believes our European Central Bank will do the same. And second, because banks can. And that, ladies and gentlemen, is the undeniable proof that investors are fleeing into real estate investments. Banks take usually 2 to 3 days in order to decide if they finance or not. Nowadays, it's more like 10 to 14 days. And one bank even told us last week that it will take them 28 days to review a financing request. 28 days! Which property can be reserved for that long? There's an unbelievable run for properties, and banks can afford to charge higher interest rates because people want to buy anyway. In times of war, I consider this pretty crazy. Knowing that at least some financial markets are crazy now, you probably think that I'm telling you now you should wait to invest, right? This episode is called Expect the Unexpected, so I'm not gonna do that. I actually never said that, and you can look it up in the February and the March video that I'm telling the truth right now. That's the beauty about this investing series, that everything is documented right here on YouTube and saved basically for eternity. unchangeable. So I cannot run around like a headless chicken giving you conflicting advice and changing my mind every other month what you should do when you're looking to invest. Go check out the latest videos yourself if you don't believe me. Since the start of the tensions in Ukraine, I said that we should invest carefully, not withdrawing completely, thinking the world will come to an end, and not investing everything hoping for the best. That's just not clever, guys. And now, 2 months later, we have the data that the recommended approach was right. There's absolutely no reason to not invest right now. So turn on the investing switch slowly but steadily. The big market drop that you might be waiting for didn't happen. So everybody who waited until things in the world get better, let me tell you, the market is always faster than you. So if you're waiting, you will lose. And that's also what happened this time. You want proof? Here's our 3 investing strategies and how they have developed in the month of March. Let's come to our 3 investing strategies. High safety investing strategy is up very little over the last month and still down almost 2% since the start of August. And that goes to show you again that the interest rate market is still in shock, a lot more than the stock market. You'll see that in a moment when we take a look at the other 2 investing strategies. The other 2 strategies are investing in stocks, and the stock market is doing just fine. The bond market, where this strategy here is invested with about 75%, is not doing so fine over the last months. The bond market faces another challenge that we touched on briefly in this video so far. The super high inflation that we have for months now. Inflation here in Germany was 7.3% in March, the highest in about 40 years. So of course everybody's waiting now on the future key interest rate decisions of our European Central Bank. And that is weighing much more heavily on the bond market than it does on the stock market. Result in March is that our high safety investing strategy is basically flat. With the payout you've gotten in March, you are slightly positive. More green charts, that's how I like it. In last month's video, we had 1 green chart and all other charts were red. In this month, we have 2 red charts only and all other charts are green. Feels much better doing a video when the charts are green. Let me tell you that. March was a great month for investments in the stock market, at least after March 15. Exactly in the middle of the month, we had the lowest point and it only went up afterwards. In the yearly chart on the right, you can see that passive income strategy had a sick rebound. That's why we are up again by 3%. On top of that, there is the payout you've got. And passive income investing strategy is doing passive income things by paying out dividends and rental income in March. Not that much to be honest, but February has been a sick month with a super high payout. And we already know that another ETF will pay out in April as well. So except in September last year, a payout happened every single month, which is super nice for everybody investing in our passive income strategy. Expecting passive income. So at least once in this video, you can expect the expected. High return investing strategy is also investing in the global stock market and is therefore also positive over the last month. With exactly the same lowest point in March 15 and the steep incline afterwards. Rebound since the start of this investing strategy in August last year is also there, but looks a little smaller than in the passive income strategy. Why is that? The tech portion of this investing strategy is a lot higher than in the passive income investing strategy. And even though tech has done tremendously in the past, it still didn't recover fully. That reminds us on one sentence we should never ever forget when investing. Say it with me. Past performance is no guarantee for future results. Thank you very much. In March, we also had the first dividends this year from 3 different ETFs. It was about time, huh? When high safety and high return strategy pay out dividends or interest income, they actually do quite a lot. In the passive income strategy, it's sometimes a little less, but it's more plannable with payouts that happen almost every single month. If you would like to join our investing community, you can open your personal investment account with Fidelity completely online with the link in the description in just a couple of minutes. The regular investment account is fine, you do not need the plus account. And I know that the button at the end of the registration says that it's gonna cost money to open your investment account, but it does not. If you click on the link in the description, it's completely free of charge. If you click on the Fidelity website directly or any other link, it might cost you something. We have agreed with Fidelity that our clients can open their investment accounts completely free. After you registered, Fidelity will send you an invitation to identify yourself online with video ident or offline with post ident. Now, very important, if you don't identify yourself, your investment account will not be opened for regulatory reasons. Sometimes people reach out to us wondering why nobody opened their investment account in the last weeks, and every time until today it was because they didn't finish video ident or post ident. So please complete your application, including the identification if you want to invest with us. If Post is super German and does not accept your passport for whatever reason, sometimes they do that, please reach out to us by mail, email, then we can start the process manually. It works, but it takes much longer than your regular online way with video ident. So please try that one first. After you finish the video ident, it takes Fidelity usually 1 or 2 days to open your investment account. We will see it before you do because we can see it electronically while you have to wait for your login details to arrive by post. That's why we will reach out to you for a meeting in which we can discuss the right investing approach for your personal financial situation. Wish all of us a lot of investment gains. See you next month, investors.